My colleague Varun and Sharad joins in with the bull and the bear case. Over to you.
Well, yes, the Indian IT space, it has seen some kind of beating over the last 3 odd months, Varun. But interestingly, there is a sliver of hope. I would
Okay.
like to put my first bull case point, and that is that there hasn't been any major cancellation of orders. If you
Okay.
look at TCVs of Wipro, Infosys, and TCS, they have actually been on a surprisingly on the upper side. You see the numbers over here. That's on the green side. So that's my first point.
Definitely the orders might be good, the TCV have shown a good growth, but if you look at the overall constant currency revenues, they have been modest. In fact, the expectations were modest and the overall performance, if you look for the IT companies, they were actually muted. Now look at Wipro, the overall constant currency growth has been down by 0.8%. For Infosys, the big guy, the overall constant currency growth has been down by around 3.5%. For TCS also, it has been down by around 1%. So you might have order book, you might have the TCVs who are going up, but yes, the overall performance, on the ground performance has not been that great. Even when compared to expectation, the companies, I mean Wipro, TCS, Infosys, any company if you mark, they have actually shown performance less than what was expected. Look at TCS, the overall miss was by around 0.6%. For Wipro, it was a miss of around 0.9%. And for Infosys, the miss was by around 3% versus expectation. So people were expecting, yes, the overall performance would be muted, but the performance was more muted than what was expected, and that is my first bear point.
Well, apart from this, this is what's happening. But what's the future? That is important. The FY26 guidance, that is good. It is not really bad as what we had expected. The future is not that bad. And all of them, Wipro, Infosys, TCS, you look at the screen, the order book is still not very bad. It is maintained, but the FY26 revenues over here, especially Infosys and TCS, over there, it has been coming on the positive side. So, of course, there seems like there is hope as well.
The future depends upon the headcount, and look at the headcount addition, what has happened in this quarter. For Wipro, it is 614, for Infosys, it is just 200, and for TCS, it is 625. And continuously we are hearing reports out people sitting on bench, there are attritions happening in IT sector, and upon that, if you look at the commentary of majority of the companies, they are saying that the overall discretionary spending, that is reducing. If you look at Accenture also, even they have highlighted some of the concerns. So yes, you might have a good future, but your future depends upon headcount, and that is a lead indicator which is showing you that there is some problem in the overall IT sector.
Well, the sector, there might be issues, but as an investor, we also look at valuations. That is very important.
Right.
And if you look at the valuations this time, post the results, they have actually turned very attractive. And of course, do remember, FIs also have strong holdings in the IT space as well. And also the DIs, they also have a big conviction in this space as well. So there might be some money flowing in because the valuations have turned attractive and they're actually significantly lower compared to the long-term averages.
Okay, the valuations might be attractive, but if you look at the overall brokerage, verdict on what they have told about on the stocks, majority of them have actually cut their price target, especially when you compare the price target with the Q3 results. Look at for Infosys, Wipro, and majority of the companies, even HCL Tech, after such good results, there are brokerage houses who have cut their price target. For these three companies, I mean TCS, Infosys, and Wipro, you have seen a price target cut of around 15 to 20% when you compare the price target from Q3. So even your valuations might be attractive, but brokerage houses are saying that there is something bad, and that's the reason there is a big price target cut of around 15 to 20%.
Well, yes, there are some brokerages coming up with target cuts, but there are some other brokerage houses also which they have given a bull case, be it Motilal Oswal as well as Kotak Securities. Over here also there is a improvement, you could say 15 to 20% return potential coming in from the current levels because of course, valuations being attractive. And interestingly, if the future holds good for these companies, then it will augur well for both TCS and Infosys as well.
If the future was so good, then there would not have been an EPS cut. Look at majority of the companies. You can see an EPS cut of around 3 to 4% for majority of the companies. For Wipro, after the results, the EPS cut on a consensus basis was around 3.4%. For Infosys, it was 4%, and for TCS, it was 3.9%. Even though you could have seen some of the broking house who have raised their overall target, but majority have cut their target and they have cut their EPS estimates on these companies because of the results that they have given and because of the bleak future that these companies have, especially after Donald Trump coming and after the tariff war, trade war which is going on. There is a lot of uncertainty with respect to US people are speaking about recession, and that's a big headwind for IT companies.
Well, yes, there is a confusion between me and Varun actually, which side to actually fall on, and we'll just leave it to our viewers what to take out of it.